Jensen Huang runs Nvidia. I don't think they're out yet. So Nvidia, I'm not sure if the earnings are out yet, but Nvidia shares set for $300 billion swing around a high-stakes earnings. They're out. Global tech stocks rally after Nvidia earnings. Nvidia reported strong earnings. Nvidia again are the kind of number one game in town in terms of making GPUs. GPUs are pretty much the only way to train your large language models, except for, as we just saw, Gemini 3 trained on TPUs, a chink in the armor for Nvidia. I think that news is not yet widely realized how important that is. Nvidia is still basically the underlying infrastructure company for all of artificial intelligence. Global technology stocks advanced today after Nvidia reported better than expected chip sales, reassuring investors on artificial intelligence demand amid growing concerns of a bubble. The thought was if the chip sales had started to soften, it shows that there's less appetite for building these models because maybe OpenAI, etc., are realizing, we need to cut spending. Everyone is throwing more money into chips. The US stock futures pointed to a rally when Wall Street opens later today. Contracts tracking the tech-heavy Nasdaq 100 were up 1.4%, while those of the S&P 500 gained 1%. Nvidia's share price was up 4.7% in pre-market trading. So again, when the markets open later, there'll be an expectation that it's going to be bumped. It's going to be a very busy market today. I'm not giving financial advice, nor should you listen to me. I do own some Nvidia stocks, as I'm sure lots of you do. Nvidia's results seen as a test of investor sentiment in the AI sector because its chips power large language models such as OpenAI's ChatGPT, but not Google Gemini 3, steadied the tech sector after a sell-off in recent weeks that came as investors grew wary of valuations and capital expenditure on chips and data centers. It's a very valid concern. There is a lot of money being pumped into AI right now with no real returns in sight and certainly no profits. So with startups, with tech companies, that is not abnormal. Often companies will go for years. Amazon, for example, spent 10 years not making a profit. That's normal. However, because such a large proportion of investment is going into artificial intelligence, it's putting a lot of money on one racehorse. If the revenues and the profits do not start to show in the next couple of years, then the investor sentiment is going to sour. We could see a downturn, we could see a collapse. And because so much cash has been thrown at these companies, that could be catastrophic. We're talking like 2007 levels of catastrophic or dotcom crash levels, which will be unpleasant.